Hello, traders, and welcome back to today's daily analysis. Starting off with the US dollar index, which has dropped for 3 consecutive weeks, reaching its lowest point since July of last year at 100.22 and nearing the crucial level of 100. This decline is largely influenced by the US labor market data, which will be key for the dollar's performance as the year ends. The slight rebound late last week was driven by the lower than expected jobless claims. The currently index is struggling with the 200 weeks moving average at 100.52. If it closes below this level, we could see more of the weakness, especially if the upcoming economic data shows a slowdown. If the index falls below 100.00, it might target the July low of 99.58. On the upside, the index could rise to around 100 and 100.0 and potentially 101.84 if it gains momentum. The key resistance level to watch are the 50% Fibonacci retracement of 102.57 and the 50-day moving average at 102.46. This week's economic US release, including the GDP and the PCE price index, will be critical for the traders. And then for the WTI crude oil closed higher for the second week, hitting a nearly 3-week high of $71.46 and re-entering the key level of $70. Although there was a slight profit taking, the prices remain above $70. The geopolitical tensions in the Middle East and the potential further interest rate cuts by the Federal Reserve may limit the downside risk. The reason Israel is attacks raise concerns about the oil supply's disruptions. The Fed recent rate cuts and declining US crude oil inventories support the higher prices in short term. Looking ahead, watch for $71.46 as the key resistance levels, with the possibility of reaching $75.27 if the market conditions shift. On the downside, support is at $70, with the targets at $69 and $67.97 if the prices fall further. Last week, for the gold prices surged to a record high of 2,600 per ounce after the Fed Reserve cutting the interest rates by 50 basis points. Despite the Fed Chairman Powell's emphasis that the rate cuts should be rare, the market anticipates another potential cut in the November or December, supporting gold's upward trend. However, the expectations of the 25 basis points at each meeting suggesting that the rally may not last. Ahead of the personal consumption expenditure, the PCE, the price index data release, the gold upwards momentum resumed after a brief sell-off, reaching $2,625.80 by Friday. Technically, the 14-day RSI rose to 71.52, approaching overboard territory. The key resistance level is $2,646, while the support levels are $2,588, $2,585, and $2,584. A strong drop below the $2,584 to $2,588 range could target $2,561.40. If the gold breaks above $2,646, it may test the psychological level of $2,700. And that is all for today. Thank you for watching.